I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on your show, Jim.
Very interesting. They're telling us that Canadian real estate overall went up 10% in the past year, but we know that whole thing has been caused by Vancouver and Toronto, right?
Well, exactly, and even within Vancouver and Toronto, it's more Vancouver than Toronto. And the last 3 months, we just updated our graph, and which people can find on our website if they want, themacbethgroup.com. And Vancouver's just gone vertical. It's an amazing, stunning visual, which of course we can't show on the radio. But the rate of growth is 23% year over year in Vancouver, and 10% year over year in Canada. So the part that hasn't grown, of course, are the wages and salaries that people would use to buy that real estate. So what initially concerned me a couple of years ago, the gap has become even wider, and it's been bridged up till now by debt and more debt and people piling on more debt. But there's a limit to how far you can stretch that rubber band.
Well, they've done surveys. People in Edmonton, Toronto, they have anywhere from $23,000 to $40,000 a year of free board money, not wrapped up in their house. In Vancouver, you live on your credit card, and after you've paid your mortgage, you owe $3,000.
Yeah, it's amazing how people can carry on. I think the belief that house prices always go up, and it's not just the owners of houses and the buyers, potential buyers of houses, but the lenders must also have this belief, because the lenders must realize that there's no way that the people buying houses at these prices will be able to pay back the loan. So they must be counting on the fact that has been true in the past, which is if the borrower gets into trouble, the lender can always seize the property and sell it at a higher price and get all of his loan back. So, you know, if that ever changes, if the collateral behind the loan were to drop in value, the lenders are going to be in serious trouble. Now, some of them are backstopped by the taxpayer. Actually, probably most of them are backstopped by the taxpayer. But there's a significant number of people lending money against real estate in what's called the shadow banking sector, which have no backstop at all. And those people, a lot of them are, I've run into a few of them, a lot of them are retired people who are taking a loan against their real estate property at 3% on a HELOC, and then relending it at 10 or 15% to people that don't have a down payment for an expensive Vancouver home. And that's just a recipe for disaster.
Wow, if they can't pay off that loan, then everybody loses their house, don't they?
Well, exactly. What people may be doing is they may be putting their own retirement at risk in order to either help their children or to invest or speculate in other people's properties. So there's no regulation of that sector. One of the interesting things that happened since we last spoke last week was the regulator of the banks, OSFI, it's called, came out with a 4-page letter, which was kind of a warning shot to the lenders that OSFI regulates. And mostly that's the banks. And they had learned, probably from the home capital fiasco, which came out about a year and a half ago, that a lot of the lenders have not been verifying the income of the borrowers, and some of the borrowers have been falsifying their income, and some of the people helping them have helped them falsify it. And it's a fairly widespread problem, as we suspected as long as 2 years ago. But the regulator appears to have finally figured out that it's a widespread problem, and they are going to crack down on it. Well, this is going to change things quite dramatically. There's nothing in the letter that says we're going to do anything like today to change the rules, but all they really have to do is just apply the rules that were already in place, and that'll have a huge impact on the borrowing and lending and potentially house prices as well.
Well, of course, the government kept telling us for years, there's no way we can track whether foreigners are buying the property or whether it's Canadians. Doesn't every real estate transaction have to be recorded on what they call a FinTrack, a financial recording document that finds out where the money's from, where the people are getting their money, where the funding will be going to? Aren't they supposed to be filling out these forms for every real estate transaction?
They are required to. The realtor and people in the investment industry like myself, financial advisors, bankers, everybody's required to fill out that form if there's a suggestion that the money is coming from foreign sources. And we're also required, if it's a numbered company, as is the case a lot of the time, I think, in Vancouver, we're required to ensure that we know all of the beneficial owners of that company. And that sometimes is extremely difficult to do if the people are not based in Canada, or even if they are based in Canada, sometimes it's extremely difficult to do. So the rule says that if you can't verify it, you have to refuse the transaction. Now, interestingly, the only really big exemption to that rule is lawyers. Lawyers are exempt because they have a privacy privilege with their clients. But certainly the financial institutions, the credit unions, all of the people are required to do this. But in speaking to realtors over the past couple of years, there might be a tendency for them to just sort of throw up their hands and say, we can't possibly identify the exact nature of the source of the money, so we just sign the form anyway. And if that's true, if that's actually happening, and I was told that by one realtor, then there's a whole area there that could be investigated, and it would have a huge effect on the real estate market in Vancouver, I suspect, because if it is true that there's a lot of foreign money coming in, even if it's legitimate, sources of funds, it's going to be extremely difficult to identify all the sources, and that would delay the transaction or possibly even cancel the transaction at that point. So somebody must be facilitating this, and some other people must be looking the other way. But that isn't the way the regulations read. The regulations read, we're not allowed to look the other way. We are required to report it. And in fact, it goes even further. It says we're required to report an incident if we have a suspicion after refusing the transaction, and we're not allowed to tell the people that have tried to do the transaction that we're going to report them. So, in a way, the financial people are kind of working for the government and become sort of like unpaid government agents at that point. But it's all about money laundering and anti-terrorism legislation, and I think it seems, there's no way to know this for sure, but it would seem that Canada is kind of the weak link in terms of the international regulation of this money laundering. Toronto, Vancouver being the hot spots. And if that's true, then there will be a big change, I'm sure, coming fairly soon.
Well, the Chinese government is going after one of its citizens who owns 3 substantial homes in Vancouver, and they claim he got his money fraudulently. He's plowed it into Vancouver real estate to the tune of $10 million, and they want it back.
Yeah, and I guess if they seize the houses now and sell them, they might even make a profit on it. Everybody will be happy, but I guess it's pretty hard to seize a house in a foreign jurisdiction and then sell it. It's got to be a challenging thing. They would require the cooperation of the Canadian government as well, and maybe the RCMP and a bunch of people. So it's a difficult thing. I think generally up until now, the money flowing internationally, whether it be from China or Iran or any number of places where there's problems at home, and possibly these people have legitimate problems at home, and they're afraid, and they want to get their money out because they're worried about their future, then it's a big part of the international real estate market. You look at London, England, or Manhattan. That was a big part of those expensive properties. I was told in 2012, when I was attending a conference in Europe, that London flats were considered a store of value among the extremely wealthy, the ultra high net worth people, as they're called in the world. And interestingly, in London, there's no rules about foreign owners, and there's also no tax. If you're a foreign owner, you don't pay the regular property taxes that a regular person would. So that's expected probably to change in a fairly near future, although even today those flats in Manhattan and London are starting to drop in value quite rapidly. But these are extremely expensive properties, like $20 million. Even more expensive than Vancouver tear-down houses.
We'll have more with Hilliard MacBeth right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Hilliard MacBeth. Now, some countries like Switzerland have very strict restrictions on who can own property. You have to be a Swiss citizen. They're very careful about who they give citizenship to, and I think you have to live there for several years before you can buy real estate, even after you become a citizen. Is it possible to control foreign ownership of property?
Well, there's a couple of examples right here in Alberta, where I live. There's Banff and Jasper, which obviously are located in a national park. And you have to not only be a resident of Canada, you have to have a reason to reside in the actual town. And, obviously they brought this in because there would be no housing left for local people if foreign people could buy, or at least non-residents could buy properties. They'd love to have a property right in the middle of a national park. And there's a shortage of housing for people that work in the parks already. So they brought in this rule: you have to show a reason to reside. And so there are a number of dentists and doctors and accountants that have set up a satellite office, if you like, in Banff or Jasper. They go there a couple of days a month, have a couple of clients, or have a session, and that way they've got a reason to reside. But I discovered recently there's another place. And it's close to Banff. It's just outside of Banff and right near Canmore, and it's a municipal district. And in that municipal district, non-residents are not allowed to buy property at all. So, the person I was talking to told me you had to fill out a bunch of forms to prove that you were a Canadian resident, and he did that when he bought. And so it is possible. It is happening in Canada. So the people that say it would be really difficult to do are correct in a way, and that it's not been the practice in Vancouver up till now. But it's not true to say that it would be impossible. It would be very, very feasible to do it. It would require some effort, and it'd be very, very interesting to see how much of the actual buying pressure is from foreign. Every realtor will tell you it's significant. But the numbers in Canada show that it is also a very significant amount of just local speculative buying, and the way we know that is just looking at the debt levels. So the foreigners tend not to borrow, they don't really want to go to a Canadian bank and get a loan. In fact, it's difficult for them to even accomplish that. So they bring their money with them. Now they may have borrowed the money back home in China or Iran or wherever they're from. But when they appear in Canada, they have cash. So if that were the source of most of the money, then there wouldn't be a whole bunch of heavily indebted Canadians. But exactly the opposite is true. The Canadians are in the top few countries in the world in terms of household indebtedness. So the people that are buying on mortgage debt and HELOCs and loans from the bank of mom and dad are up to this to their eyeballs, and they're Canadians in large part. And so it might be that symptom where the foreigners kind of set the price at the margin, and then all the Canadians are trying to keep up to the foreigners. I don't know, but it certainly is not just a story of foreign buying alone. There's definitely a huge component of local, regular Canadian people who are trying to buy properties that they probably cannot afford.
Well, they did a survey, and people with young families in Vancouver, a lot of them have said they're going to move out in the next 3 years because they simply can't afford to live in the city anymore. They're headed for the burbs.
Well, I remember a long time ago when I was in graduate school in economics being told that real estate is a function of the availability of good paying jobs. And the closer the real estate is located to the good jobs, the higher the property prices are. And there was a elaborate mathematical formula, as economics tends to do, to prove this, and it looked very neat. And that's one of the puzzles about Vancouver, because there really are not, for a fairly large city, there really are not a large amount of extremely high-paying jobs. In fact, the average wages and salaries in Vancouver are lower than the average for Canada. So, it really is it's a choice of emotion and a choice of love, or whatever you want to call it, to just say, I absolutely have to live in Vancouver. It isn't people coming there for the jobs like they were coming to Alberta during the oil sands boom. So if that's the case, the people that are living there now and can't afford to find a nice place to live, if they're not there for a job, then it'd be fairly easy for them to leave and move to a place that has a job. I would have said come to Alberta a year and a half ago, but the jobs are not that plentiful here anymore either. So I don't know. Maybe it's Ontario or some other place. The Bank of Canada just came out with their monetary policy report, and they're pretty convinced that the lower Canadian dollar is going to generate an export boom here pretty soon, but it has not shown up yet. And in the meantime, another economics group called Capital Economics came out with their report on Canada just today, and they said the only thing holding Canada together in terms of the weak economy that we have, but is still positive, there is a small amount of positive growth in Canada. The only factor that's doing that is real estate and real estate construction, and it's a huge percentage. As I've talked about in the past, it's 7% of the Canadian economy, much higher than the U.S. or other jurisdictions. So without that support from real estate, and I was surprised to see how significant percentage of the real estate investment, if you like, comes from the transfer of property. And so the transfer of property primarily includes real estate commissions paid to realtors, but also legal fees for the transaction and property valuation fees and fees that are earned by the lender in terms of putting a mortgage in place and all that kind of stuff. The chart I saw today was as high as 1.5% to 2% of GDP. So that's a very significant amount of activity. The total, for example, of renovation is about 3.5%. So just the trading of properties, trading them like stocks, has become a significant economic generator in Canada. And of course, if the bubble bursts, then that will slow down to a trickle from the current tsunami that's happening right now.
And of course, municipalities with these higher property prices are getting a tidal wave of property tax money.
That's a really good point, Jim. I remember in the global financial crisis, there were jurisdictions in California that had to lay off all of their policemen and all of their teachers because their only income had been property taxes and the transfer of properties. And when the global financial crisis hit and home prices dropped and people started defaulting, the revenue completely dried up, and they had no money left to pay their policemen and their teachers. Now, I don't think in Canada we have quite so heavy a dependence on property taxes, but it would be a significant hit for most cities like Edmonton and Calgary and Vancouver if people were unable to pay their, if house prices drop and the mortgage is worth more than the property, nobody's going to pay that property tax. And in fact, another interesting thing happened in the global financial crisis in the United States was the banks didn't foreclose on the property, because as soon as they foreclosed, they owe the property taxes. So they just sat there, and people actually lived in their homes for, on average, I think it was 2 years, 24 months, rent-free, paying no property taxes. But the bank didn't move in to take title to the property, because they didn't want to be responsible for all the costs associated with owning it, which mostly property taxes. So there was just this limbo, and a lot of people just stopped paying their mortgages and just stayed in place. Now, I don't know if that would happen in Canada, but that's what happened in the United States.
Hilliard, thank you so much for chatting with us.
Nice to be on your show.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's a portfolio manager and financial advisor in Edmonton. You're listening to HoweStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.